Welcome to the new week on Monday, October 21st, 2024. I'm Jason Shapiro, and we're going to try and make some sense out of the randomness today because I thought it was kind of an interesting day and worth talking about. Let's start with the stock market. I would call today a good COT day, pretty much across the board, but certainly in stocks, and what I mean by that is we see that in the Russell, this is where speculators are the most long. And we see in the Nasdaq now, this is where the speculators are at least long. And this doesn't work every day, but it did today. The Russell clearly underperformed the Nasdaq. It was down right from the get-go, and it never really could rebound. Whereas the Nasdaq did try to go down, and it did rebound and almost closed on highs. So specs are too long Russell, not long enough Nasdaq. Nasdaq outperforms the Russell. That's how it looks when COT stuff works. I think it also worked in metals, quite frankly, because you have, yes, speculators are somewhat long gold and silver, more than somewhat. They are long gold and silver, okay? But they are not at max long, which is what's necessary for me to try and get short it, at least. Not that I'm the be-all and end-all by any stretch of the imagination, but for my process to get short, it needs to be max long. But where they are very long is in platinum. So if you think today was a reversal day in metals, and I'll get into that in a second, if you ask me, platinum is the place to be short because that's where people are most long. And so if it does get liquidated, that's where the most liquidation has to happen, and that's probably where the biggest move down will be. I don't think it was a reversal day or a news failure day in metals today because what was the news? I mean, bonds got crushed, which I'm going to get into in a second as well, and the dollar ripped. So why were metals up even to begin with? And in fact, gold actually did close up on the day, despite it all, and silver closed up too. So it's just the momentum at this point is why it was up. There's no fundamental thing going on here. The momentum, well, there is a fundamental, but today the momentum is just kind of carrying through, but they really shouldn't have been up necessarily based on the moves in dollar and bonds. So again, the conclusion there is if you're looking to short a metal, I believe that platinum is the place to be short. And just getting into all this, I continue to believe, and I have said this many times, it's all about bonds here. And look how poorly bonds did today. And bonds are, and this was often no news, by the way, bonds are making new lows here. This is when the Fed cut, okay, 25 basis points. And I think this is the most important market right now for a lot of reasons. And the main one being that people, I believe, are continuing to not understand bonds, right? They just hear Fed's cutting, therefore bonds go down. No, I'm sorry. Fed's cutting, therefore rates go down and bonds go up. No, okay? The short end, as we know, will be, the shorter you go, the more accurate it is to what the Fed does, because the Fed does the very short end. They do Fed funds. But the long end is all about expectations of future inflation and growth. So all things being equal, if the Fed is cutting rates, expectation for future inflation and growth will go up, so bonds will go down. But in this case, you actually have the Fed cutting more aggressively than expected, into a situation that clearly there is no shortage of liquidity, as is proven by the fact that gold, silver, stocks, and all these assets are on highs. Okay, so it's a dangerous situation, and to me, very bearish bonds. So, and that's why people are buying things like gold and silver, right? Because if you don't have a growth problem or anything, or you don't have a liquidity problem, and you're cutting rates aggressively, then things like gold and silver are going to rip. Right? Inflation expectations are going to go much higher, and people are going to get into things like gold and silver, which is why they're going up. Until, and this is why bonds are so important, until they finally do conclude that, hey, maybe bonds are going down, which they have been quite a bit for a while here. And then maybe they can get scared, and I think that's what happened today. Then they can get scared that, oh my God, bonds are going down, rates are actually going up. So maybe that's not as bullish gold and silver, and they can get out of that stuff then. But as it is, it didn't work today. They started to get out of it at one point, but they still closed up. But I'm talking about the metals other than platinum, which closed down. So I think that's why bonds are the most important thing here. There's a misunderstanding of what's going on, and eventually the market will force them to understand, and then there's going to be some shifts. The purest form of all this is just be short bonds. Forget about short gold based on the second derivative of all that. Just be short bonds, you know. And on that same note, the dollar, went a lot higher today as U.S. interest rates were going higher, as it should. And to me, the other good trade, which I talked about, around these levels, I was originally short in the Aussie dollar because I thought that was the best way to play the China thing. If you thought the China thing had a chance of failing, the Aussie dollar short was probably the best way to do that, because that's where the positioning was highest and that's where the market was trading the worst, right? This was the reversal day on Aussie dollar on China day. And I continue to think that an Aussie dollar was the worst currency today, except maybe for yen, which I was also talking about as a way to short the China thing, by the way. But, now the Aussie is really the most crowded one. So the Aussie is the one where I continue to be short and continue to think it's a better way. If you want to be short metals, be short Aussie. There's a correlation there, first of all. And second of all, this is the one that's weakening. Look what Aussie has done relative to what gold has done. Here's gold, right? Here's Aussie. Let's be short the weak, because it's already working. So let's be short things that are working. Let's get in trades that are working rather than fighting trends and all that, right? So that's the general idea. Energy today were kind of interesting too, because they were, for the first time in a long time, the strongest commodity. And I know, straight up, I know that being along the energies has been very tough. And if you were long the energies, even if you got a really good spot, this very highly likely scared you out from a risk management point of view. I know a lot of people that just did this too. And then now it has a good chance of going back up because the last long probably got out. It's very tough to be long that stuff. And it was funny that Kashkari, the Fed guy, came out today and said, he mentioned that, how the global situation, the war situation, was not affecting the prices of energies. And I've heard that now this whole way down. People have been saying that, right? And reading the tape is great. I think that's a great tape read, except when everybody starts doing it, including a guy who I like to call Captain Obvious. When Captain Obvious starts to be able to see that, the risk reward changes, right? And that's what I think we might be seeing. I think there's a good chance that energy goes right back up here. Let's see. You could certainly have a stop in at the low here. Worst comes to worst down here. But that's the energy situation. And just following the China situation, China cut rates today, which I suppose was kind of expected. But they did cut rates, and the Chinese stock market did go down. So again, this is just something that I like to monitor. As I've talked about before, I think it's super important to monitor how things are going to react to what's going on over there, because it's going to be a great precursor for the next time they have to do that in the U.S., right? Which is no time soon. But if I know everybody's counting on the fact that if assets prices do start to drop a lot, the Fed's going to be there, right? They got the backstop. They will start printing money and doing all these things again. So given that's what's already going on in China, I think it's a great thing to monitor. So the monitor just for today was that they did cut rates and the Chinese stock market went down. So interesting to me. Interesting day. That's how I'm seeing it. I hope that helps. Please check us out on crowdedmarketreport.com for more. I would check out the Larry Williams interview that we just released this week. Really interesting, from a really interesting guy. And like the video if you like it, please. And we're always happy to hear questions and comments. Okay? Thanks, and have a good day.